Thanks, Chen. Now I'd like to introduce two investment opportunities. First, I would like to talk about a company called GS Home Shopping and why the stock is cheap. As its name implies, this is a home shopping company, and the company achieved close to $1 billion US of sales and $125 million of operating profits last year. GS Home Shopping trades about 12 times its last year's earnings, and the stock price has been declining since the beginning of 2013. The primary reason for this is the company's earnings declined last year amid retail slump. The consumption in Korea was affected by a disastrous ferry accident last year, but the consumption is likely to rebound this year. I think the core competitiveness of the company is still intact, and the stock price became cheaper. GS Home Shopping is one of the leading home shopping channels in Korea. The business has huge bargaining power over merchants. The company has growth potential in mobile and international businesses. The home shopping business in nature requires very little capex requirements. As a result, the company holds lots of cash, which is almost 60% of the market cap. The stock can deliver tremendous return with capital allocation improvement. In fact, it increased dividends by 120% last year. Given its strong moat, possible growth potential, and better corporate governance, the stock is extremely cheap. The stock also has very little downside risk given its strong balance sheet. I'll talk briefly about the company. The company started in 1995 as one of the two licensees. The company began selling various products through TV and catalogs, and now the company expanded its distribution to internet and mobile. Given its large cash holdings, its EV over EBIT is low at about 3.5. Its majority shareholder is GS Holdings, which is a mid-sized holding company having a rather simple structure. About a quarter of the company is owned by institutional investors, both foreign and domestic. Especially domestic institutions led by NPS are increasingly pressing the company to pay out more to outside shareholders. Now I'd like to talk about the Korean home shopping industry in general. The GS Home Shopping is one of the 6 Korean home shopping companies operating right now. Korean home shopping industry has been growing about 14% per year over the last 5 years, and actually faster before that. The reasons for popularity and growth of Korean home shopping include diverse merchandise items, such as various trendy the private label apparels and insurance products, and the free delivery and return policy, and entertainment factors. Some of the show hosts even became a celebrity in Korea. Home shopping now accounts for about 4% of the total retail sales. Now let's look at the sales trend of GS Home Shopping. The gross merchandise sales have grown very fast, as you can see in the graph. Actually, the company has grown almost every year, with the exception of early 2000. In 2002, the Korea had a credit card bubble. Last year, the margin shrank because of investments in mobile. Although the market share decreased a little bit in 2012 when the 6th player entered the market, the overall sales went up as the total size of the industry grew. New entrants have little impact on the top 3 or 4 leading players. The company has growth potential both in overseas market and mobile shopping. GS Home Shopping entered 7 countries, and business in China began making profits. Its profits are increasing rapidly. Although the growth of traditional TV shopping stalled recently, the portion of mobile increased significantly. Many sales through mobile came from TV, home shopping specific products. As you can see in the table, Korean home shopping companies trade at a discount to its U.S. counterpart despite the better economics and growth potential. Among 3 listed Korean companies, GS Home Shopping trades the cheapest. The GS Home Shopping is expected to achieve about 1.2 trillion won of sales and 117 billion won of net income in 2015. We used a multiple of 12, which we think is conservative given its growth potential and competitiveness. We multiplied 12 to its forward after-tax EBIT to calculate the operation value. We then added the value of its net cash holdings. Its intrinsic value is about $2 billion. As you can see in the diagram, the current market cap of $1.2 billion is significantly lower than the company's intrinsic value. We think the intrinsic value of the operation is conservative because we didn't even include its growth potential in overseas market and mobile area. The stock is undervalued even without its cash value. Given the new environment such as the government's new policy and more active stance of NPS, we think many companies including GS Home Shopping are likely to return more cash to investors. In fact, the company increased the dividend substantially last year. Therefore, if the value of only a small portion of its cash is unlocked, it is significantly undervalued. Next, I'd like to introduce our second investment opportunity. I'll talk about a rather small company called Korea Alcohol Industrial, a manufacturer of specialty chemicals. The company achieved $170 million of sales and $12 million of operating profits last year. The company trades about 10 times its last year's earnings or higher depending on the price. The stock price went up recently, but it is still cheap in many respects. I'll tell you why. The company manufactures specialty chemicals including ethyl alcohols and ethyl acetates. The company is very competitive in a niche market. Despite the recent slump of the chemical industry, the company has maintained steady income. The company owns a controlling stake in a listed company called ENF Technology, a manufacturer of processed chemicals used for semiconductors and LCDs. The company also owns real estate property whose value is worth nearly 50% of the market cap. This stock is a good example of a holding company discount because the value of its non-core assets is not properly reflected in the stock price. The company can improve the value significantly by selling the real estate property. Now I'll talk about the company briefly. The company was established in 1984 and manufactures organic chemicals including ethyl alcohols, ethyl acetates, ethylamine, and many other products. The company's products are used as feedstock for various products including paints, solvents, medicines, cosmetics, beverages, etc. The company maintains a dominant market position in its own areas. The founding family owns about 45% of the company through its affiliate companies. The company owns a controlling stake in ENF Technology and involves in the real estate business through its affiliated company. Now I'll explain about the ENF Technology. The company was established in 2000 and manufactures processed chemicals used for manufacturing semiconductor and displays. Korea Alcohol and its founding families own about 35%. The business enjoys high entry barrier created by high switching costs for its customers. The company is expected to benefit from the turnaround of the semiconductor and display manufacturers. The company achieved 250 billion won of sales last year and its current market cap is about 195 billion won. The company trades about 19 times the last year's earnings, but only 8.7 times the forward earnings. The company owns real estate property which is worth about 55 billion won. Unlike ENF Technology, this business is totally unrelated to its main business. Through its subsidiary called Susan Corporation, the company owns several mini malls in California. Next, financials. The company is expected to achieve 191 billion won of sales and 117 million dollars of net income in 2015. We used a multiple of 10 and multiplied it to its forward after-tax EBIT. The value of the core business is about 86 million won. After adding the value of its non-core assets of 95 million dollars, we derived equity value of about 161 million dollars. As you can see in the diagram, the current market cap of 108 million dollars is only about 60% of the intrinsic value, calculated as the sum of the operation, real estate property, and the stake in ENF Technology. As I mentioned earlier, if the company unlocks the value by selling off the real estate property, the value of the company will significantly increase. Even without the sale, the current market cap is significantly undervalued, as the value of its stake in ENF Technology is not properly reflected. Now I talked about two investment opportunities, but in fact there are many more opportunities in Korea. Finally, what is the takeaway of today's presentation? First, many Korean companies have solid economic fundamentals, but most of the stocks are cheap because of the so-called Korean discount. Although Korea discount is partly deserved, Korea has been going through positive regulatory changes for improving corporate governance. Despite the image problem of Korean chaebols, many small and medium-sized companies have better governance with a simple corporate structure. Many Korean companies will become more shareholder-friendly by returning more cash to shareholders, as the policy changes and more assertive institutions are likely to influence the decision-making of many Korean companies. As Korea discount is likely to get smaller, the current Korean market presents lots of opportunities for international investors. Thank you very much.